and you can't be discussing with the family members and be disturbing us. So just use the chat box if you want to say something. Then if maybe something you want to say with your mouth, then I can unmute only you. Right. So we have had issues where people would be disturbing the call with their background noise. Okay, now handling drawdown. That is what we're talking about. Right. So now this is something that many people don't really talk about. Most people always, especially on social media, right? They always trying to post or paint this picture that they don't have drawdown, right? So the key point here is handling it as a professional, right? There are many ways to handle drawdown, but we're going to focus on the professional way to handle drawdown, right? That's what we're focused on. How do you handle drawdown as a professional trader, right? So now we have to understand what drawdown is, right? Firstly, many people have different definition of drawdown, right? So in summary, drawdown simply means loss, right? When you take a loss, that is what we call drawdown, or maybe might not be a loss. So what we mean as drawdown, we're talking about a closed, right? Either a closed or running loss, right? Or deduction of original balance or equity. So I'll make this smaller so I can enter it. Yeah, make it smaller. Okay, a bit bigger. And make it bold. Okay, so that is what drawdown is a close or running loss or a reduction or reduction, not deduction. Okay, reduction of original balance slash equity. So many people don't know the difference between balance and equity, right? Many people always find it difficult. The difference between balance and equity um is this way, right? Equity refers to running, like your equity refers to um the running balance, right? Like when you take a trade and man, your this thing is running. Also refers as equity. The running, like your running profit or loss. Like if you remove your profit and loss from your equity, that's nice running. For example, if I enter a trade now at maybe I use $100 to enter a trade and it reduces to 97 and I've not closed the trade yet, my equity currently is that's running loss. Like that's balance that's currently running. I also refers as equity. Why balance is the one that you have closed. So balance refers to what remains after you close the trade, either a profit or loss, just what is left after you close the trade. Why equity is what is running, why the trade is on. That is the difference between balance and equity. So equity is kind of running, why balance is closed, like the closed trade. That was referred to as balance. Why equity is the running balance, like when the trade is on. Right. So now when we say drawdown, we're referring to a closed or running loss or a reduction of original balance or equity. All right. So now there for you to handle drawdown, you must know that they have various kind of drawdown. Right. We have the first kind of drawdown where you have what a loss from initial balance. Right. This is a first kind of loss or first kind of drawdown. Right. We have basically three kind of. I have the loss from initial balance. We also have the loss from um balance after withdrawal. So I will explain this one, no worry. So there's a different kinds of drawdown, right? And then we have this kind of drawdown where, sorry, loss from equity slash balance all-time high. Right? These are the various kind of drawdown, right? So now these are the three different kind of drawdown. So the first one is when, for instance, now you deposit, let's say, you can see that literally we are always in drawdown, right? Most of the times, in fact, most 90% of the time you are in drawdown, right? So most of the time you're in drawdown, but you might not really know the kind of drawdown that you're currently facing, right? 90% of the time you're in drawdown because it's very, very rare. Like it's very, very rare. The only time that you're not in a drawdown is when you're having a winning streak. This is the only time that you're not in a drawdown, when you're having a kind of winning streak, you're winning all your trades, right? That's the only time. And you know that winning streak don't most times it happens on very rare occasions, right? So winning streak is something that happens very rarely. We take 5 trades, win all. We take 6. It's something that happens very rarely, right? So now, understanding the kind of data that you're facing is one of the key things to actually handling it. So now, if for the first one is when if maybe you take a loss, like you had $100 and then you take a loss and it reduces towards 90, right? Your deposit has reduced, right? This was a you had a $100 deposit, right? And then it now reduces towards to 90. That was what this is the first one, right? This was the original deposit, right? And then sorry. So this is the original deposit, and then you lost $10, and that drops to 90. That's what we call a loss of initial balance, right? Your initial deposits. You can also name it as initial balance or initial deposits. So that's amount that you deposit in, right? When you go below that, that was referred to as an initial balance drawdown. So this also refers to profit. If you buy a profit account and then you take a loss, maybe you lose the first trade and then it goes below that, maybe if it's a 10K account and it goes to maybe 990, that's a drawdown, right? So that's the first kind of drawdown. Now the second kind of drawdown is when, for instance, now maybe you deposited let's say deposits $100, right? And then you make what, you make profit of $50, right? You make profit of, let's say, $50 profit, right? Yeah, you make $50 profit, and then you now withdraw it. So when you now withdraw that profit, and you are not left back with $100. If you take a loss on that 100, that is the kind of drawdown we're talking about. So now your account has gone below. So if maybe you make a profit and then you withdraw, right? You profit $50 and then you withdraw it, right? And you withdraw that, right? And then you now take a loss now after withdrawing the profit. And your equity now drops to, let's say, $90, right? It drops to 90. Consider they've also taken another drawdown. So now in this type of drawdown, your loss is from the balance. Like you have made profits quite all right, but you remove your profits, right? And then you not take a loss, right? Now what happens is that you have taken what a drawdown based on what your balance after withdrawal. And then the last one is when you let's say you have a deposit of, let's say you deposit $100, right? And then you grew it to, let's say you grew the account to, let's say, 200, right? And then you take one, maybe few losses, and then you now drop down to, let's say, 180, right? You drop to 180, right? So the all-time high in this scenario was what? The all-time high, right? The all-time high is what? The 200. So you grew your account to 200, and then you now made losses, and it's now down to 180, right? So in this, although you're in profit here, right? But you are still in a drawdown because you have gone below that high. Like if this was your high was at 200, right? That was the highest point the account got to, and then it begins to drop. Maybe it can even drop to as low as even as can even drop to as low as even sometimes even 120. And if you take losses in the road, maybe drop to 120. Consider although you're profitable, right? You're still net profitable, but you can see that the account is below the original balance, right? So these are the three basic kind of data that I can think about or I can remember as of giving this speaking. So these are the three basic kind of data. So either you're in data from your original one, which is this is the first one is a, an actual loss, like it's an actual loss, right? Why the second one may or not be loss. Like the second one now may be a loss, may not be a loss, right? It depends on how you see it. So if maybe pay the profit and withdraw, you spend it. So to you it might be a loss. It does depend on how you see it, right? It depends on how you see it. Right. Number two is relative to the person that's involved, right? If the person doesn't see it as a loss, then it's not a loss. But the fact that you have gone below what's that balance that you left, right? So now the last one is could also be profit or loss. Just depends on how you see it, right? So you can see that in any of these three examples, we are still in drawdown, right? Drawdown simply means when your account goes down, and it draws down. That is what it simply means. So you can see that most of the time, this is why I say that 90% of the time you are in a kind of drawdown. So you have to get used to it, right? You have to get used to it that 90% of the time you're going to be encountering drawdown, like 90% of the time. If you check any profitable trader equity, you can never see an equity that looks like this. Like just looks like just straight like this. It's very rare that you see an account that looks like this. Like the equity graph is just straight up, right? If you plot it, this side will be this is time. And you see this is the downside is time. And if you plot the upper side, this side is let's say profit, right? So yeah, profit. So there's no, it's very rare to see an account that looks like this. like as time is going, just going straight up. It doesn't really happen, right? But how a professional trader account looks like, right? It usually looks like this, right? This is it's somewhere. So it usually looks like this. You see some drawdown, market goes back up, gives some drawdown, goes up again. Sometimes maybe go below this, like market structure, and then continue all the way running up. This is how it usually looks. So this is how a profitable trader account looks like, right? If you I think Mark Douglas shared this graph with us, right? He was based on Mark Douglas worked with a lot of big time traders, and he noticed that most of the profitable traders, their equity actually looked like this. So as time was passing, they were having setbacks, and then so if you draw a line of best fit, right? If you did physics in school, instead of using a line of best fit, you can see that this is the line of best fit, right? Joining the points, right? This is if you're using the line of best fit, joining the points, like for those that did science in school. In fact, if you did science, you must have learned physics, which is line of best fit. So if you do the line of best fit, this is the best line. Consider that overall, this account is what? Up, right? But it is not what? Linear. So as time is going, it's going to encounter drawdown, up, drawdown, movement up. That is how a profitable trader account looks like, right? So this is one thing that many people don't know. Many novice traders, they always believe that their account, if your account is not win, then they're not profitable. That is wrong. Because why? The market condition changes, right? The reasons for all um this income, like all these pullbacks, is because number one, the market condition changes. Right? The market condition is always changing. So that is why you cannot have wins all the time, right? Market condition changes. It doesn't mean that you're a bad trader. For instance, now I trade smart money concept, and one of the debts of smart money concept is that our strategy finds it difficult to survive range or ranging market. This is one thing I know based on my experience trading in this. I've been trading smart money since 2021, right? For this is my fourth I think yeah, third year trading smart money concepts, right from 2021 up to date. I've been able to realize that SMC, like what I use, like smart money market structure, means that the death of our strategy or the major enemy, or when the market does not really work, like when our strategy does not really work, is when the market is ranging. That is the time I will take a lot of losses. For instance, if you check January charts, you see that January chart had a lot of range. That was why a lot of us lost a lot of money. Like last month was crazy. And NFS lost his account. Paladin lost $1 million challenge. JCap had one massive drawdown. Many top traders that use SMC concepts, they took one kind of loss or the other, right? So that is why. So you might use a strategy that is favorable for ranges, but it's first some people their own strategy is favorable for what counter trend movement. So some people that own is like all these people that trade martingale, right? If you trade martingale strategies, something like counter trend will really work for you. So there are strategies that work very well with counter trend markets. So that is why you cannot always have a like a straight line graph in your equity, because the market condition is always changing. This month might be ranging, um, next month will be smooth. So that is just the thing. That's why you cannot just have that smooth equity, because when the ranging market comes, your strategy is going to have a lower strike rate, which will result in what? Drawdown, right? So that is why you should understand these are things you need to put in consideration. When you understand these things, then you won't be so bothered about when you take a losing month, because this simply means that you're going to have months that are losses, right? You're going to have losing months, losing weeks, because your strategy might have a weakness. That it cannot survive ranging markets, right? And one thing about the ranging market is that you might not notice it on time. I once have noticed most times in a ranging market, you won't notice it on time until you have lost a lot of money. That's, oh, this is a range. Oh. But when the market is kind of creating that range, you won't really know. Because now, if the market is moving now, or let's assume the market is moving in a trendy fashion, market range is moving, and then it now starts ranging. You won't notice initially until the range becomes very obvious. You won't really notice the market is ranging until it becomes obvious. So while this range is forming, you might be taking a lot of losses because you don't know that this range has started forming, right? That's one thing that people don't know. So no matter how good your strategy is, most times you're not able to anticipate those negative conditions because it will take you time to figure it out. So while the range is forming, you won't really know. Let's assume that maybe you are trading when the market was at this point here, like this range was just forming. You won't know it's a range until that's formed for a long time. Like market has range for a long time. So, oh, this is a range, right? You won't really know it initially. So that is why you have to subject yourself to time, right? So this range might mean that you're going to take what, a losing month. Like so many of us, we had a losing month in January. Like some of us had a lot of losing months in January. Some people had losing months in December. So it just depends on your strategy, right? So market condition is one of the things that leads to you having these inconsistencies. And another thing you understand that leads to this drawdown in your equity curve, despite it being profitable. But what leads to this up down movement can also be what your current emotional states, right? Your current state of mind, right? So this as maybe um in January, maybe you had a divorce, or maybe you had an issue with your house rent, or something was just bothering you, right? And most times as a trader, when our state of mind happens to be affected, it kind of tells on our results. Most times, when we take maybe we're having negative experiences, maybe at our business place, our boss fires us, or maybe you had a fight with someone that you love, all those kind of things, it leads to that affected state of mind. So this could lead to all these losses, right? And then also it might not even be situation. It might be that you are trying to force a particular setup. For instance, now you saw a bullish setup and you're trying to force it. So your current state of mind wasn't flexible, right? Although you are seeing maybe sell opportunities, but your mind was this is a bullish market. I know some of you can relate. Have you guys ever been in a situation where you are like bullish on the market, and because of that your bullishness, you close your eyes to sell opportunities which you have made money on? If you have had that kind of experience before, where because of you're not flexible, you lost a lot of money. It's not after you now saw, oh God, I could have sold this, Have you guys had that kind of experience before, where you were kind of trying to force a particular thing on the market? Meanwhile, there were other opportunities which were opposite, but you didn't see it because you were just focused on that your original bias. Have you guys had anything like that before? Have you experienced that kind of situation before? Have you guys experienced that kind of situation before? Wow, someone has experienced it too. So that is one of the reasons why you're going to be having, you know, that's one of the reasons why you're going to be having those pullbacks in your equity curve, because sometimes your state of mind is like fixed on a specific thing. And because it's fixed on that specific thing, you're blind to other opportunities. That thing happened to me, was it on Thursday last week? I was looking for EU buys by all means. Like all my eye was buy, 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 buy. And I was like, in fact, I wanted to cry when I most times when the market is done moving, right? Once I do is that I kind of go through the whole price action to say, okay, what did I miss here? So when I was like kind of trying to review my trades, I was like, okay, what did I miss? Why did I take a loss here? And this is that this market was giving very clear, like, those beautiful sell setups. Like it was giving very clean inducement cells. But me, I was so focused on buys. I was seeing this, right? I was seeing this as a break of structure. Like this is what I was seeing. Because I wanted to buy by all means. I was seeing this as a BOS. Meanwhile, this move was what? An inducement and a tapping toward this other block to sell down. So this was actually the sell setup. But me, I was seeing this as a BOS because my mind was what? To buy. So I was telling me to look at it as what? A bearish break and then a mitigation. I even saw that Asian highs were even captured. I even saw that the market took an Asian highs. I was like, it was after this that I saw, oh my God, I really messed up. But my mind was not seeing this. My mind was seeing, my mind was seeing break of structure and other block. So that's what my mind was seeing all through. I was not seeing it the right way. I was just seeing this because I wanted to buy by all means. And the market really, really clapped me. So I'll enter a buy. The market will not simply do something like this. It will treat me like I was just getting from the market. I was like, what is going on? So you can see that is one of the reasons why you can't have a smooth equity curve. And despite all these things that happened, I still closed the week net profitable on that account. Despite all these pullbacks, I was able to close the account profit positive because um this is how a profitable account looks. So you have to put that at the back of your mind. Now, one of the reasons why you're not going to have a strong equity curve because of your state of mind. Most times, some things are distracting you. Your mind is somewhere else, and you're not really seeing what the market is doing. So it happens to all of us. Sometimes we're trying to force a bias. Maybe we already give analysis, and we want to just follow analysis because it says you discipline. So now being disciplined is, in fact, being disciplined can be a fault at when it's taken to an extreme. When you take discipline to an extreme, it becomes a fault because you're no longer flexible. All right. So flexibility is something that you need to also add, even though you're disciplined. Be flexible. Now, okay, this my discipline plan might not work, so let us change it. Right. So most times you have to also you have to switch between being flexible and being disciplined. Right. So it's not that you must just be rigid. So the extreme form of discipline is being rigid. Rigid in that you cannot change. You just want nothing to be the way you want because that's the extreme form of discipline. So you have to just make sure that you're pressing discipline at a medium level, that you're not too rigid and you're not too quick to change your mind, right? You're not easily bent by every wave of doctrine, right? So that is it. So these are the basic things that lead to this drawdown, right? There are a lot of them, but for now, I'll just mention two of them, right? Current state of mind, and then for this state of mind, if I want to spend the whole day talking about this state of mind, it means a lot of things. Sometimes you can be very, very confident. Maybe you took five profits for maybe took maybe five wins, and then you're not very confident. You want to go and maybe double your risk, and then you not take one massive loss. Your account not drops, like you give one massive drop because of what your state of mind. You are too confident, right? All those things lead to it. All those things, revenge trading, they're all caused by your state of mind, right? So that is one thing you should know. That's why you cannot have a smooth equity curve because of all these conditions, right? And another thing you should also know that your fundamental. This is another reason that you cannot have um all right. So this is one of the reasons why you cannot just have that smooth equity curve. So sometimes you might be bullish on the market, and then the fundamentals start to change the market from being bullish to bearish. For instance, now this week we had a lot of bearish movements on on DXY, right? I don't know, can't really remember again because market was going up and down. Okay, I believe that we had a lot of due to the news that came out this week. We had a lot of bullishness at the early part of the week, like Monday, Tuesday, Wednesday. We had a lot of bullishness on EU. We had a lot of bullishness on EU, GU in the early part of the week, right? So sometimes when fundamentals begin to come in, you will not really notice it. And note something that if you're bearish on the market, right? If you're bearish on the market, like maybe you have been selling, enjoying yourselves, right? It's almost impossible to know that there will be a break or so here, right? You won't really know it on time until it breaks. So maybe assume that maybe you are trying to sell this market now, and the market is coming up. You're like, okay, the market is bearish. Let me just sell it again. And the market now changes structure. The chances that you're going to do will take a loss because why? The market is changing structure, right? So most of the time when the market is changing from bullish to bearish, we take a lot of loss. When the market is changing from bearish to bullish, when there is that change in trend, most times we tend to take a loss because why? The popular approach is what? Follow the trend. So if you're following the trend, like the market is now, understand that the market is what? The market has been bullish, let's say for the past 6 months, right? You have been seeing bullish for the past 6 months, and then the market wants to change from bullish to bearish. The chances are that you're not going to see that change on time. You're like, oh, it has been bearish for 6 months. It might just continue being bearish. So most times when the market is about to change in trend, you will not see it coming. You won't really see the market, you won't really see it coming until it changes. So those changes in trend usually lead to what? This drawdown. So these are the things that really cause drawdown. These are the main causes of drawdown. These are the main causes. Market conditions, your current state of mind, and then your fundamentals and changes in trend. So I think I should have been separate it. There are two different things. So let me just separate it. So there are two separate things. So changes in trend also lead to what? That. It leads to what? Those pullbacks in the equity curve, right? Now we have known the three kinds of drawdown that we have. We have known that these are the reasons why you're going to encounter drawdown. So now, how do we handle drawdown, right? Now we have known that most of these things are beyond our control, right? Most times, the reasons for a drawdown are beyond our control. Like this market condition is beyond your control because most times you won't see a range coming until you start ranging, right? You won't see a trend coming until it starts trending. So most times you can't really know that the market is going to range until it maybe takes you like 2 or 3 times, or the market wants to change trend. Like sometimes this is to do me a lot. Like I'm trying to buy a market, I didn't know that the trend has changed. I'm going to be taking 2, 3 losses because I'm trying to continue the trend. Like me personally, I like to do in line with the trend. In market is I want to buy. If it's better, I want to sell. So most times when market is changing from being bullish to bearish, I'm not able to know on time because there's no way to know that. Right? There are things that are unknowable in trading. And one of the things that are unknowable is a change in trend. Right? It's one of the things that are unless maybe you use fundamentals for your analysis. But if you focus most on technical, there are things that are unknowable. And one of those things was when the market is about to change the trend. One of the things that are unknowable, right? Or when the market wants to give a deep pullback, right? So just I don't know if there's a word like this. These are things that are unknowable, right? You cannot know this when the you cannot know when the market wants to change its trend. It's very, very difficult to just sit on time until maybe you have if maybe you have fundamental, maybe you have a strong reason, maybe you look at maybe collecting pay, maybe you have a reason behind the scene. But based on just the charts, right? Just looking at the charts, you can't really know when a trend wants to change from being bullish or to bearish. You can't really know beforehand until it changes, right? And when I mean change, I mean higher time frame. I don't mean 1 minute breakups. I'm talking about 4 hour daily, those bigger change of trends, right? So and one of the things that you need to know, right? So those are the things. So there are things that are unknowable. So I really find it very, very funny when people want to know if you understand that, right? So now another reason that so that is basically it. So market conditions, your state of mind, fundamentals, change of trend, and then other factors to lead to what you have what causes pullback in your equity curve. Remember, this is how the equity curve of a profitable trader looks. It looks like this: up, drawdown, up, drawdown, up, drawdown. Maybe kind of all time, I mean, short term low, and the market continues and it continues to rally up. This is how an equity curve of a profitable trader looks. That is how it looks, right? It's not like straight up. So if you understand this, right, this what I'm teaching you guys is that I'm trying to give you guys a psychological backing because coming out of Jordan is mostly a psychological work. When you understand all these things, then you won't be under, some people, once they start taking losses, they begin to feel that something is wrong with them, right? So the purpose of me taking my time to explain all these things is so that you understand that Jordan is normal, right? It's normal to have those losses. It's a normal thing. And every trader encounters Jordan, no matter how good you are, right? As long as you trade manually, you're going, if I remember right, it's every trader encounters drawdown, right? I know as many monitors won't say this because it will not sell their course well, or it won't sell their signal services well. Right? You've seen 90% strategy, right? That's something like that. And if anybody that started his strategy is 90% is a scammer, take it from me. Anyone that started his strategy is 90% is a very big scammer. His scam is lying to you. Because if your storage is 90%, why are you selling signals? Like, why are you selling it? If it's really 90%, why are you selling it? And if it's really 90%, that means all your students should be very profitable, right? Imagine when you're having 90% strike rate. That means everybody that pays for your signal, they should all have Lamborghinis. Like, all of them should have Lamborghinis. That is what it means. For you to have 90% trust, you know what that means? And if you take 10 trades, you're taking 9 wins. That simply means that your students should be like having big cars. Like I'm talking of 6 months interval. They should all have big cars, big houses, because that kind of win rate is unreal. Right? So sometimes someone is saying that I have 90% total, I have 100% strategy. That person is a scammer, right? Every trader encounters drawdown, no matter how good you are. Every trader encounters drawdown, right? And now certain things are unavailable, and those certain things are unavoidable, right? So one of the things that are unavoidable is a loss, right? So it's not unavoidable. You cannot avoid it because you know the one that is great. So just like death is unavoidable because everyone will die at some point, right? Unless maybe the Lord comes before you leave. Some things are unavoidable, like losses. So many people are always trying to, avoid these losses. When they want to take a trade, they'll go and show everybody. They will ask person A, what do you think about this? They ask person B, what do you think about this? They will ask like 10 people before they take a trade because they want to avoid a loss. So that is how that is how you actually make yourself to suffer more. Because there are things that are unavoidable. If you know that loss is unavoidable, then you won't be putting too much emphasis on every trade outcome. If you want to take a trade now, you must show your mentor, you must show everybody in your trading group. You must post on Twitter and ask for opinion. You will post everywhere just because you want to avoid a loss. That is one of the ways that professional traders behave. They like to avoid, they want to avoid losses. I know one popular saying I got from Bob Proctor. He said that what you focus on is what you attract. So when you're focused on avoiding losses, you're attracting it, right? You should be focused on making gains, not avoiding losses. So whenever your actions are based on avoiding a certain thing, what you're doing is that you're bringing it to yourself. Like Job said in the Bible, Job said, "What I feared most has happened to me," and it's a very very deep saying. I was reading a book of Job. Sorry if you're not a Christian. I was reading the book of Job carefully. I noticed that Job usually gave sacrifices to God, right? Job used to give sacrifices to God. And if you check his sacrifices, the reason for it was that he was saying that perhaps one of my children has sinned against God and God would not punish me. So the reason why Job was giving sacrifice was because he was trying to avoid punishment from God. Note, just read Job very carefully. The book, that first chapter, first, second chapter. So the reason why Job was giving those sacrifices is because he was trying to avoid the negative repercussion of the sins of his children. There was no record where Job gave sacrifice to thank God for anything, maybe for thank God for increase. We didn't see any of that. The only reason why Job was giving sacrifice was to avoid God's punishment. And as life will have it, that thing he feared came to him. So when you're operating from avoiding a negative circumstance, you're actually attracting it your way. That is what many on professional traders do. As long as you're always trading with the mind of avoiding losses, you're going to keep taking it like back to back, right? So if what you should do is you have to focus, you have to focus. Sometimes if fear wins, it doesn't really work that way, right? Fear in itself is a negative energy, right? Fear in itself is a negative energy. So you can't use fear to achieve anything profitable, right? Fear on its own is a negative energy, right? It's a negative energy. So you should be focused on being profitable. Okay, if I trade for 1 month, I should make gains. Okay, I'll take. I see if you check my oh my god, I remember what I posted on. I said I posted this on the first day of the week. If you check my Twitter post, I was like, if you check my Twitter post, I posted I said that it's a new trading week. I will probably take some losses, but I'll end up profitable. I don't know if you guys remember that tweet I made on Monday morning this week. So last week, yeah. Do you guys remember that tweet I made? I was like, it's a new Monday morning. I will probably take some losses, but I will still be profitable. Do you guys see that post I posted on Twitter? That was on Monday morning last week. Yeah, good. So that is the mindset. That's the kind of mindset I have. And I ended the week like crazy profitable. I took my accounts from 5.5% dollar. Like my account was down 5.5%. Like it was down the previous I was down 5.5%. I used last week to clear it and bring it back to break even. So that's why because I am focused on being profitable. So I was like, it's a new week. I will take some losses, but I'm going to end up profitable. And that's what happened. Because my mindset is what I am focused on making wins. So I see losses as what just the normal events that happens in the trading journey because of why market conditions, my state of mind, fundamentals, and then I didn't add this example. So another reason why you can also have is what yeah, that was another reason you can have this is what you can have this drawdown is what this. So this is another thing too. You might just get it wrong. Your analysis might just be wrong. That's just a simple illusion. Maybe you're just totally wrong. Like what you analyze is rubbish. Just take it happens too. You just make a rubbish analysis and then take your loss. Just pam. So that's another reason. So you cannot take losses. There are things in which I will take up like, oh boy, which kind of trade with this one? I will just be God. What kind of trade is this? What kind of trade is this? After I've taken a lot, I'm like, God, what have I done? What kind of rubbish trade is this one? So, but at that particular moment, when I was taking a trade, I didn't see it as a wrong trade. But it's after like, God, what kind of trade is this? It was not even a discount, though. There was no entry on this thing. What was I even thinking? So you might get it wrong. And every human being is born with imperfection. So there are times in which you're going to just take a loss like completely, right? So it's not something that you should, be beating yourself over, right? So I think this meeting is about to end in 1 minute. So I'm going to send you guys a new link. Like I said, I'm having issues with my USD card. In fact, Twitter had to refund me. I don't know what's going on with my card. It's not being accepted. I can't pay for Zoom once I'm able to rectify the issues with my USD card. So I can't pay for Zoom until then. So I want to send a new link so we can continue this call. So I think in the second part of this call, we're going to really delve deep into how to come out of drawdown, right? So the premise of coming out of drawdown is to understand these things. That's why I just took my time to explain these things so that you will not you just understand the fundamentals of drawdown, what really causes drawdown, what this is the mindset behind it, right? So in the next call, which I will send the link in the next 1 minute. Let me just end the call now and then send a new link so you guys can join. All right. So let me send a new link. Let me end the call and send a new link.